Welcome to my channel, where we will be discussing on the secret to wealth that no one told you. What if I told you that building wealth isn't about luck, flashy investments, or earning a massive income? The real key lies in following time-tested principles, and no one exemplifies this better than Warren Buffett. Today, I'll break down his most powerful lessons that could change your financial future. Buffett didn't inherit his fortune, marry into wealth, or stumble upon success by accident. He built it by understanding how money works and avoiding common financial mistakes. Imagine being a kid more interested in investment books than toys. Buffett was that kid. By age 11, he had already bought his first stock, setting the foundation for his future success. The best part? His wealth-building strategies aren't complex, they're simple but require discipline. 1. Start early and let compound interest work. Buffett often says the best time to start investing was yesterday, and the second best time is today. The reason? Compounding. It's like planting a small seed and watching it grow into a massive tree over time. His fortune wasn't built overnight, it snowballed because he started early and stayed consistent. For example, if you invest $10,000 at a 10% annual return, in 10 years, it grows to $25,995. In 30 years, it becomes $98,374. The secret? Time. Compounding isn't just about money, it applies to skills, habits, and relationships. Practicing a skill daily for years can make you world-class. Buffett stayed consistent, avoiding distractions and reinvesting earnings, which is the true power of compounding. When Buffett started his investment partnership in 1956, he had just $115,000 from 7 investors. Today, Berkshire Hathaway is worth over $900 billion, proof of compounding in action. 2. Live below your means. Buffett could own private jets and islands, but he doesn't. He still lives in the same modest house he bought in 1958 for $31,500. His philosophy? If you spend money to look rich, you'll never be rich. Instead, he saves and invests, ensuring that every dollar today works for a better tomorrow. Living below your means creates financial freedom, giving you the flexibility to quit a job, travel, or start a business without financial stress. Buffett's lifestyle isn't about deprivation, it's about intentionality. Unlike many billionaires with lavish lifestyles, Buffett focuses on results, not appearances. 3. Invest in yourself. Your best investment isn't stocks, it's yourself. Buffett believes that improving skills, expanding knowledge, and building relationships offer the highest returns. He famously said, "The more you learn, the more you earn." He spends 80% of his day reading books, newspapers, and reports because knowledge compounds. When was the last time you invested in a book, course, or skill? Even free resources like libraries and online courses can make a difference. One of Buffett's most valuable investments was a public speaking course by Dale Carnegie. It boosted his confidence and communication skills, which later helped him close billion-dollar deals. Learning never stops, and even small improvements add up over time. 4. Protect your capital and learn from mistakes. Buffett's golden rule: never lose money. His second rule? Never forget rule number 1. In practice, this means avoiding risky investments and not putting all your eggs in one basket. Buffett doesn't chase quick wins, he plays the long game, investing in strong businesses with long-term potential. He also admits when he's wrong and learns from mistakes. He believes that if you find yourself in a financial hole, the best thing to do is stop digging. This cautious and disciplined approach ensures that his wealth continues to grow over time. Before we proceed, please support this channel by liking, dropping a comment, share to your friend and loved ones, and subscribe to this channel. 5. Wealth is a mindset. For Buffett, wealth isn't about money, it's about freedom. He doesn't let market fluctuations or other people's opinions dictate his decisions. Instead, he focuses on the long term. When Buffett buys a stock, he isn't concerned about short-term fluctuations, he's looking 10, 20, or even 50 years ahead. Patience and vision separate him from most investors who are driven by fear or greed. Integrity is also key. Buffett famously said, "It takes 20 years to build a reputation and 5 minutes to ruin it." This principle guides his business decisions and ensures that his wealth is built on solid ground. 6. Avoid debt like the plague. Buffett's advice on debt is simple: don't let it hold you back. He's seen many high-income earners get trapped in financial quicksand due to credit card debt, car loans, and oversized mortgages. He warns, if you're smart, you can make a lot of money without borrowing. High-interest debt eats away at wealth, so paying it off quickly is crucial. Buffett also avoids time debt, overcommitting to unimportant tasks. He's selective about how he spends his time, ensuring that his focus remains on what truly matters. Why most people fail to follow these principles. Many people know they should save, invest, and avoid debt, but they don't act. Why? They think they need a lot of money to start, feel overwhelmed by financial advice, or are stuck living paycheck to paycheck. Buffett's strategies are simple, but they require discipline. Most people underestimate the power of small actions over time. Here's how to start. 1. Start small. Even investing $50 a month can make a difference. Buffett didn't start with millions, he grew his wealth gradually. 2. Simplify your finances. Avoid chasing trends. Buffett recommends low-cost index funds, which outperform most professional investors over time. 3. Automate savings. Set up automatic transfers to your savings or investment accounts. 4. Break the paycheck-to-paycheck cycle. Track your spending, cut unnecessary expenses, and redirect money towards savings or debt repayment. 5. Practice patience. The stock market transfers money from the impatient to the patient. Think long-term. 6. Shift your mindset. Wealth isn't just about money, it's about freedom and security. View money as a tool, not a goal. Final takeaway: you might think Buffett's advice is easier to follow as a billionaire. But the truth is, his principles work no matter your income level. Compounding works even with small investments. Living below your means isn't about income, it's about smart spending. Investing in yourself doesn't require a fortune, it requires commitment. Buffett's wisdom is timeless. It's not about hacks or quick wins but about habits, discipline, and perspective. Whether you're a student, a young professional, or nearing retirement, these lessons apply to you. The key? Action. Knowing these tips is one thing, applying them is another. Start where you are, use what you have, and remember, wealth building is a marathon, not a sprint. If you follow Buffett's principles, starting early, living below your means, investing in yourself, avoiding debt, learning from mistakes, and thinking long-term, you'll be on the path to lasting financial success. Having a clear sense of purpose is also essential for building wealth. When you know what you want to achieve, you're more likely to stay focused and motivated, and you'll be more effective in your efforts to build wealth. If you've made it this far, I'd love to hear about your own experiences with building wealth, what's worked for you, and what challenges have you faced. Be sure to check out my other videos for more insights and advice on how to achieve financial success. Don't forget to hit a subscribe button and drop a comment.